A stock is a part of a company where you have an ownership stake and can vote on issues. Most companies allow one vote per share, which allows stockholders to vote on issues. In addition to market value, dividend payouts can also be issued by some companies. These payouts change based on the company's profitability. An investment portfolio can grow and provide income through stocks, which are risk assets. This means that the degree of price variability is high. When starting out, investors need to be aware of the degree of risk that they take with stocks. The higher the risk in an investment, the greater the potential for profit. However, investors must be willing to risk losing money if high profits don't materialize. Studies have shown that stocks have been a reliable investment choice over time, producing stable annual returns. Stressed out by record inflation, steep interest rate increases, and economic uncertainties, the stock market has crashed in 2022. It has caught the stupefied attention of some of the industry's biggest companies, particularly technology stocks, which have been adversely impacted. Facebook parent Meta has fallen 53% until July 14, 2022. Apple has declined 16%, and Microsoft has declined 24%. Stocks have suffered because of the highest inflation in 40 years, which has prompted steep interest rate increases and has prompted economic worries. Last year's performance provides a clear indication of how quickly the stock market can change. Meta, Apple, Microsoft, and Alphabet are examples of companies that experienced sharp losses this year, in addition to posting solid gains last year. If you had invested in these firms or the index through an index fund, your investments would have grown by a lot last year. Let's talk more in depth about investing in stocks. Where to start? To begin investing in stocks, you must first open a brokerage account. The next step is to transfer money from your bank account to invest in stocks you want to buy. You decide how much money to invest based on your risk tolerance, objectives, and how much money you're willing to potentially lose. Stock markets tend to rise in value over time, but there are sometimes short-term fluctuations that can harm your finances. How much to invest? For beginners with little money who want to get stock market exposure, a discount broker is an excellent option. Many discount brokers don't offer advice or analysis, though. In addition, some discount brokers don't require a minimum amount to begin an account, while others have a starting threshold of $1,000. Market volatility. You might be nervous about the high volatility in stocks, especially if you're a beginner. However, it's critical to invest in companies that generate increasing revenue and profit over a long period of time. That way, you can be assured of the company's success even if the stock price fluctuates. Investors may view a company's stock price decline as an opportunity to buy more stock at a better price if they have confidence in the company. By looking at a company's metrics, you can gain insight into how companies and industries are performing. Which investments to make? When stock picking, value is an important factor. Quality of management, industry performance, and company profitability are just a few of the criteria investors must consider determining whether a stock is undervalued or overvalued. Investors must study a company's financial reporting history, understand the company's industry position and performance, and many other factors to value a stock. In addition, the stock's price may be different from its intrinsic value. Stock investing can yield profits two ways: selling shares when their value increases and receiving dividends. Companies may pay dividends, either in cash or stock, to shareholders on a monthly, quarterly, or yearly basis. Investors who want to generate steady profits from their stock portfolios purchase stocks that pay dividends. Investors can reliably obtain dividends as income regardless of whether a company generates profit, because dividends can be distributed even if the company does not. Many dividend stocks have had a long-term history of strong cash flows, had low debt levels, and provided attractive yield. Invest on your own or with a financial advisor. You may invest in stocks in several ways, but before you begin, you must determine which type of investor you are. You may choose to work with a professional financial advisor or take care of things yourself. You can set up an online brokerage account and handle your investments on your own. You can save money by working with a robo-advisor, which will do most of the heavy lifting for you at a lower cost. When you open an online brokerage account, you are asked questions to help determine an investment strategy. These questions involve identifying your financial objectives, such as retirement or a big purchase, and your investment tolerance for market variability. You might want to invest in more growth-oriented investments if you want to achieve early retirement, but if you want to achieve something closer to hand, such as buying your first house, you'd be better off with a more moderate portfolio. Working with a financial advisor may be right for you if you aren't sure how to materialize your long-term financial goals or where to start with your investing plan. Stocks may be more risky than other securities such as mutual funds or exchange-traded funds. That said, if you're not sure how much of your money to allocate to stocks, you may work with a financial advisor to develop a strategy. Stocks for new investors. It's a fool's errand to think you can consistently beat the market, but buying high-quality stocks such as blue chips and dividend-yielding companies is often a good strategy for beginners. Investors often choose blue chip stocks because they are stable and have generated dividends in the past. Coca-Cola, Procter & Gamble, and Microsoft are just a few of the well-known blue chips. Dollar cost averaging. After choosing what stocks to buy, the question becomes when to buy them. The adage buy low, sell high is sound, but it is hard to identify when a company's stock is at its lowest point. Many beginning investors enjoy a dollar cost averaging strategy, which involves investing a fixed amount on a regular schedule regardless of the stock's current price to alleviate the tension of timing the market correctly. That said, some investors do achieve better results investing a lump sum all at once. This is because it is often preferable to invest money sooner rather than sitting on cash. When to sell. Being capable of recognizing when to relinquish a position without making a rash decision is a vital skill for savvy investors. Having an exit plan in place will help you keep emotions out of the decision of when to sell. Businesses change and companies can fail, so it's critical not to fall in love with a stock. Staying focused on the long term when following the news is tough. Experts advise ignoring the short-term noise so you can maintain perspective within your strategy. Make sure to consider the tax consequences when selling. Warren Buffett advises people to buy and hold stocks for at least 10 years instead of selling and repurchasing them constantly. Stocks should at least be owned by prospective investors for 10 years to be considered good investments, in accordance with his philosophy.